In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market. We will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which at the moment is testing a quite strong monthly resistance area. In fact, from here, all this previous move to the downside was created again here. The market tested its zone and rejected it to the downside. At the moment, the market is testing exactly the same zone from which we could expect a potential rejection to the downside away from the area. So here in the monthly, we could expect some bearish price action. However, it is also important to keep in mind that both times in the past, the market went for a deeper test of that zone before then getting rejected. So if we look closely, we can see how there is a possibility for some bit more of short-term bullish price action for a test of the high of this resistance and then to see the potential rejection to the downside. Now, dropping down the weekly, what do we see? From a weekly perspective, the price action is quite clear. Now, I did speak about gold when the market was here and explained all the reasons for which we could expect this rejection to the upside. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. However, at the moment, what we can see is that the market is testing and rejecting precisely previous weekly resistance, which is now turned support. And as we're testing and rejecting previous resistance turned support, we could expect more bullish price action to be created away from this area. Now, if we drop down on the daily time frame, what do we see? Now, from a daily perspective, we can notice how the market has just created a quite strong impulse to the upside. In fact, from here we had a very strong impulse, then we had the start of this correction. And in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how we have a market which at the moment is reaching the zone, which is in between the 0.3 to 50% and 0.618 of the Fibonacci taken on this daily impulse. Now, in a situation like this, as the market is reaching this zone and testing it, there is the possibility to see from here a potential rejection to the upside away from the zone, considering that if we extend this to the left, we can see how this is also the previous daily resistance here, again resistance here, which after the market broke it to the upside started acting as support at this level. Now this means that from here there is a possibility to see a potential rejection to the upside away from this area. So how we could be approaching this potential rejection to the upside? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action, potentially also with students, during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you. And I will see you in my next breakdown.